Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And you know, the premise behind so many different swing trades is just to look for a stock that has recently pulled down to a low, but it's starting to potentially move back up to a high. But how might the trader find that? Well, today we're going to be focusing on using the tools on thinkorswim to find tradable stock pullbacks, maybe down to support levels. I think it's going to be an interesting discussion. We're going to be taking a look at our existing positions and also the market, so a lot to cover. Before we can get to any of that, though, let me first of all say hello to everybody who's out there joining in YouTube. As always, we see the familiar names. There might be one or two that are new, so welcome to everybody. Hello there, Mighty Mouse, Life in the Fast Lane, Mary, Kevin, Will, Trader Joe, Roger, ETF Trader, Rojo, Chris, everybody else. Thanks for joining us week after week. We really do appreciate your attendance and your contributions to these discussions. If you are among those that are here for the very first time, welcome to you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy those recordings. It's a great way to watch these webcasts. But if you would like to be here in our live stream audience, this is a Friday webcast series. We kick things off promptly at 1 Eastern time each week. So we'd love to see you here in the live audience. Now, I also want to let our live audience members know that my very good friend Scott Thompson is going to be hanging out in the chat. Scott's going to be addressing any questions that I can't get to, just keeping an eye on those chat questions. But Scott, thanks for having my back there. Scott and I have worked together now for 2 decades, so Scott brings a ton of experience to this discussion. Now, Scott and I would also like to issue an invitation to everybody watching to follow us on social media. You can find us on X, so you can follow Scott there at Scott Thompson CS. You can find me on X at Cameron May CS, or you can also follow me on LinkedIn. Just go to linkedin.com/in and then /Cameron May CS will take you to my profile and you can give me a follow there. But let's get to this discussion. Should be a fun one. Before we can do that, though, of course, we need to bear in mind this important information. Risk is real, so bear these disclosures in mind. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including a loss of principal. All right, so with that said, let's set the agenda for today. So as we do each week, we're going to first take a look at our existing paper money trades. I'll just quickly revisit the technical logic for those trade setups, see how those are advancing, make any changes. Spoiler alert, I don't think there's going to be any changes to those positions today. Then we're going to move on to a review of the markets through our trend value momentum strategy set. And finally, we're going to leave the bulk of the discussion for conducting a scan on thinkorswim for those swing traders who may be looking for bullish trade setups where price has pulled down from recent highs to potential support levels. And then we'll use that scan to plan and place a new trade. So let's get right to it. Let's go right to the thinkorswim desktop platform. This is the paper money platform. And we have 4 positions. We have one little tiny one from back when we were taking smaller trades, and I've pretty rapidly noticed that we weren't accumulating a lot of trades, so we've increased the trade size. In any case, our first position is General Electric. Looks like that trade is going quite well, up about $1,500. We own 100 shares. Here was the logic for that trade. So GE, we took on a bullish crossover using the weekly and daily PPO. Now, for each of these, I'm not going to explain how the indicator works or, precisely how it might be used for trading. That was for that discussion in the past, and we're sort of moving on from those. But if you'd like to go revisit the full logic of the construction of indicators and how they might be traded, you can go to the channel. Make sure, if you haven't done this already, make sure that you're subscribed to our Trader Talks channel. You can just click on the subscribe button down below. But Trader Talks, Schwab coaching webcasts on YouTube is where you can, yes, join our live streams like this one right now, but you can also find playlists of previously delivered webcasts or videos. So I'm going to go to the playlists, and as we scroll down just a little bit, we'll find my advanced charting techniques right here, and I can click on View Full Playlist. And for example, if you aren't familiar with this weekly and daily PPO, there's the 45 minutes we dedicated to that indicator. So that's where this General Electric trade comes from, or GE Aerospace, I suppose. Anyway, but going back here, we're looking to sell on a bearish crossover of this weekly and daily PPO. We don't have that yet. That would be the green line. the faster. In other words, the daily slipping back down over the weekly. Anyway, so we're going to leave that position in. Let's go on, have a look at our Intel trade. 100 shares there. That one's doing just fine as well. Here's the Intel trade logic. So this one, we have a different set of studies. So we've saved those up here. Let's load up that study set for our Intel 200. This is our 200 triangular moving average plus the true strength index. And this was looking for a combination of signals on the entry. First of all, we needed price to be above the 200 triangular moving average with an upslope to that trend line. We met those criteria. We also were looking for a crossover of the true strength, and we got that right here. So we took the entry on this day. This was on January 2nd, so it's only been 2 weeks. Now this is one that's interesting. Okay, maybe I wasn't planning to make any changes to trades, but when we took this entry, this was about a $39 stock. Here we are now, we've been as high as $50. Excuse me, according to my math, that's a 33% increase in price and starting to peel back from that right now. So a trader may have been anticipating a move, but sometimes along comes the trading fairy and they drop in and they sprinkle some pixie dust on the trade, and it does way better than anticipated. So a stock that moves up this quickly while we're waiting for this, while we're waiting on this trade signal, could it reverse course just as rapidly? And by the time we get that crossover, we've lost some of this? Certainly could. Yeah. So yeah. And by the way, Wiley says, how do we maybe conduct a scan for these sorts of things? With many of these signals, I will construct scans toward the end of the webcast, not every time, but you may want to go back, check out the webcast, look, see if the scan was built at the bottom. Obviously, I'm not going to be building this scan today, but I'd say go back and have a look. I can't remember if we did a scan for this one or not. I think so. Not sure. Anyway, well, we could. The trader might say this is way beyond their initial expectations. Maybe just take full profits, if possible, if we're in a good liquid security. Or how about for this one? Well, let's scale this one back. Bought the shares at $39.32. We might be able to get out for about an $8 profit at this point. That's more than 20% in less than right at 2 weeks. Let's right click on this. Now make a note. If it says sell here, what is this? This is our stop order. So we might need to cancel and replace this order first. And it's for 100 shares. Let's change that to 50 shares. Click confirm and send, replacing that stop. As always, stop order is not a guarantee that we'll sell at a specific price. There's not a commission on this trade, but there can be on some types of trades. And let's send that order off. Trader might also look at maybe moving that stop up on the remaining shares. Let's leave that where it is for now. But let's also now close out of 50. I'm going to create a closing order to sell not 100 of those shares, but just 50. And I'm going to sell right at the market price today. Obviously, we're not guaranteed a specific price for the market order, but it can increase the probability of a quick fill. That's the trade-off there. But let's try to sell 50 shares of INTC at the market price. See if we can realize a gain here. Let's send this off. And we sold those shares for $47.92. So I'm going to make a quick note here on our chart. Let's see, we bought the shares for $39.32, and then we just sold those shares for $47.29, almost $8. That's $7.97. So there we go. Let's make a note here. I'm going to pop this right up here. Let's put a text note right on our screen. Sold 50 shares for a $7.97 profit. Guys, if you would, just double check my numbers for me. Make sure they're correct, but I think that's right. I'm just doing the math in my head. But I like to make a note that here for future reference, what happened to half of our trade. All right. So on with the rest of our positions. Bit of an executive decision there with Intel. because for some trades, they just blast off. We didn't see it coming. For some traders, they'll just say, I'm just going to stick with it until I get my exit signal. Others maybe decide to scale back. All right, what about our McKesson position? McKesson was taken for a different reason. Let's come up here to our study set. Let's load up our McKesson zigzag high-low as this indicator is zigging and zagging. Sometimes we take a bullish entry on a zig, and we take a bearish exit on a zag. We got in on a zig here, waiting for the zag. It hasn't happened yet. In the meantime, we do have a stop in place, so we'll just leave that one to work. That one seems like it's doing okay. Actually, that's pretty good for 6 shares. That's doing fairly well. Those 6 shares up like, I don't know, 4%, something like that. Anyway, finally, we have our Tesla trade. So this is last week's trade, and it's a little slow out of the gates. We own 50 shares of Tesla. Let's see. Trader Joe says, if you open a trade with a stop, can you just click the X on the chart to cancel a stop and create a closing order to cancel a stop? Yes. Yeah. Yeah, like I can click this X right here to cancel the trade. I think Trader Joe, that's what you're asking about, or this one down here. Yep. But for Tesla, let's load up our Tesla study set. And this was a rate of change trade as long as our 50 exponential moving average is above our 100 exponential moving average. So this was sort of our trend confirmation, and looking for the timing within that trend using the rate of change. We like to see that down below 0 typically for an ROC trade, and then starting to tilt back up. So specifically, we're looking for a sag below 0 of at least -10, and then a rise. And we got that here. So our entry was right here on the 9th. That was a week ago. And we entered, it was kind of towards session highs. So we've come back a little bit. This little bit here is what's being shown as our unrealized loss on Tesla. But we do have a stop in place. We do have a target in place up here just around previous highs, and it's just sort of waffling around in the middle. So we already have a plan. We're going to stick to that plan. We'll see how that one goes. So that's it. We did make one change to Intel, but those are our 4 current positions. Let's take a look at what's going on with the markets overall as we're planning for a new trade. Maybe a trader's trying to decide between bullishness and bearishness. Or maybe they're trying to decide whether to be, if they're just bullish, if that's their traditional portfolio approach, should they be very bullish or maybe a little bit less aggressive, smaller, more tentative positions? Well, let's see what's going on with the S&P. And the S&P we typically look at through our example lens of the trend value momentum, abbreviated to TVM strategy set. So for traders who use this, and I'm going to unclutter my chart here a little bit. We don't need these vertical lines. Let's come up here and change our chart settings. Let's go up here where it says time axis, and I'm going to uncheck the box for show expiration Friday. That's what this is for options traders. I also don't need quite so much space off to the far right of the chart. I don't need all of this extra white space. So let's make that a little bit narrower, just 10 extra days of time being displayed on the chart. We'll click apply, click OK. There's a little bit cleaner chart now. All right. But for a trend value momentum strategy set trader, it can be used for index analysis. It can also be used for individual stock trades. But the checklist that they'll typically go through is to first identify what's going on with trend. And a trend confirmation might be as simple as, is the 50 triangular moving average still above the 100? Is the short-term trend still rising ahead of the longer term? So that's a yes. Number 2 is what's going on with our RSI, or short-term value indicator. So T for trend, V for value, as measured by the RSI. The RSI has actually been strengthening. We've been reaching higher lows, which is just sort of a confirmation of the trend. Now that's bullish, but for someone who was maybe looking to take a brand new trade, this might not be the best technical value in recent days. That might have been more when we're closer to that 40 level. But overall, though, with this sort of behavior on those lows on the RSI, it looks like that's another check for the bulls. Now, finally, what's going on with our momentum indicator? Trend T, value V, M, momentum. Our momentum we measure with the MACD histogram, and it is bullish. It's bullish, though, with a little bit of an asterisk. Why do I say that? Why might some traders say, yeah, it's bull, instead of bullish, it's bullish? Why? Well, our MACD histogram is above the zero line. It's green, but it's transitioned from bright green to dark green. And for some, that could mean a little bit of hesitation in the momentum that's currently held by the buyers. So when we see this, it's still a bullish check mark. It's just not a very convincing one. It's not a great big bold stroke. It's a little tentative mark. All right. But that's sort of check, check, check for the bulls. So let's go ahead and say that our trader is still quite bullish and they're ready to go with full positioning on new bullish positions. So let's go do that. But maybe our trader has in their mind, I want to do a short term, maybe a swing trade. I want to try to buy something that's low with the objective to hopefully sell it high. Well, in order to buy low, we've got to be able to find low. So we're going to be building a custom scan here. I'm not going to be using any scripting, so it's not going to be anything that can't just be replicated right at home. But we have to know exactly what we're scanning for. And what a bullish swing trader looking for a pullback down to support might need to solve for 4 issues. All right, let me just sort of rattle these off. As we're building a scan, what might be the priorities, the 4 things that our trader is trying to solve for and try to find with their scan. Number 1 is possibly trend. There are a number of technical traders who prefer to trade with the trend, so we might want to find some apparently solid confirmation that trend still seems to be, let's say, bullish, since we're going to be doing a bullish trade today. Number 2 is the position of the price within that trend. Price, I'm just going to call it price position. Because let's say that our trader is maybe using a moving average to identify a trend, but price is below that moving average. It's out of position. Price can tend to lead lots of technical indicators. And so therefore, if it's behaving bearishly, maybe the trend is under threat. So I'm going to look to try to find stocks where the price position seems technically correct, right? And that's going to be according to a fairly strict definition. Not everybody defines things the same way. Number 3 is a recent pullback, because we can have trend up, price is above trend, but it's way above trend. And if we're looking for lows, that might be the opposite of what the trader is looking for. So we're going to look for a pullback. But here's the final issue. If we've been pulling back, that can tend to give the stock momentum in the wrong direction. So the trader might want to see some indication that momentum is starting to shift again. Now, we could use an oscillator. I'm not going to do that. I'm going to be more precise and use just price itself. But what we're going to finally look for is what's called a bounce. In other words, a shift in momentum at the bottom of a pullback. That's quite a bit. That's what we're going to be looking for with our scan. So how do we put this into scannable terms on thinkorswim? Let's go build a scan. Now I'm going to be using study filters, and they're only available on the live platform. So we're going to leave the paperMoney environment, and I'm going to go over to fake demonstration live platform. Okay. Now I have both of those up here, but I always keep my, when I have 2 thinkorswim sessions going on, one's paperMoney and the other one's live, my preference is to have the paperMoney a nice bright white. It's very reassuring. Then I have the dark background, which is, to me, kind of a more cautionary color. Cameron, this is real stuff. Don't mess up. It allows me to see the distinction between the 2 platforms very easily. But let's go to the scan now, and let's start to add some study filters. And specifically, we're going to be doing 5 different technical studies. Or 5 study filters. So I'm going to get rid of these stock filters. Let's close those out. And how about, maybe just to kick things off, the definition from one trader to the next of what is tradable and what is not can strongly vary. Some traders might prefer, let's say, smaller, more volatile stocks. Others might prefer larger, potentially more liquid stocks. Let's conduct this scan, maybe just in the S&P 500. So maybe we're sort of in the latter category. We're traders that are looking for liquidity first. So we're going to look at some of the largest companies in the world. But let's see which ones of those have uptrends, right? That was going to be our first priority here. So let's create a scan for that. So I'm going to add some filters. Let's add a filter, study, add a filter, study. All right. These 2 are going to be our trend filters. So we're going to first of all look for a short-term trend, and then we're going to look for a long-term trend. Number of different ways that we might scan for stocks that are in upward trends, but one way is just to compare moving averages. You've seen me do it with triangular moving averages with our TVM study set. Let's just stick with a simple moving average this time, and maybe our trader might use a shorter period, let's say a 50-period moving average, and as long as that's above, let's say, the 100 period, that might indicate that the shorter term trends are advancing above the longer term or the intermediate trends, and we might have at least a short-term uptrend. So let's go here to edit this filter, and we're going to put in a custom study here. Let's delete this. Let's add a new condition, and this is going to be a study filter using simple moving averages. So this is the first one, and the first one is going to be a 50. And we want that to be greater than a second moving average, simple moving average, the 100. All right? So we want the 50 to be greater than the 100, and we want that to be, for today's example, right up to today, right within the most recent trading bar. So we're going to save that. The 50 simple moving average is greater than the 100 simple moving average. Great. Click OK. That becomes our first requirement for a trend. Next up, let's see if the intermediate trend can also be confirmed as being above the longer trend. So for that, let's just use a couple of different moving averages. Instead of the 50 versus the 100, maybe we use the 100 versus the 200. Now, somebody just asked, do you have a webcast on ABCD setups? In other words, typically when you say ABCD, you're talking about, why is it escaping me right now? Hold on a second. I just shoved my earpiece into my head way too deeply, and I got a little bit of an echo. There we go. That's a lot better. Elliott wave theory, right? If that's what you're talking about, here's what you might want to do. Go to our channel, and you can just type in Elliott. Hey, there's trading stocks in multiple time frames with Elliott wave theory. Now, instead, you also asked about Fibonacci retracements. If that's an item of interest, type in Fibonacci retracements, and you'll find all kinds of discussions along those lines. Yeah, Elliott wave, there you go. Thank you, Kevin. I know you're throwing me the reminder. I appreciate it. For a second there, had a brain cramp, but we got past it. So, yep, there you go. Let's get back to our scan, though. And let's just repeat this process, except instead of a 50 versus a 100, it's just a 100 versus a 200. We're starting to develop those navigational skills. We just come here. It's a study, the simple moving average of one length, the 100, is greater than the simple moving average of a second length, the 200. And that's right up to the present day, just within the last bar. Click Save and click OK. So just right now, if we run this scan, this is going to search the S&P 500 and find all the companies where the 50 is above the 100, the 100 is above the 200. I'm guessing there's going to be a ton of them because the markets have been so good for the bulls. Let's run a scan just to see. All right, let's let that load up, and it looks like, yeah, 219 of them. All right, so that's potentially a solution for our first priority. Second priority, though, is where is the price, the current price? It's entirely possible for the 50 to be above the 100, but price has recently fallen down below the 50, maybe even below the 100. Those are trailing moving averages spread out over 50 or 100 bullet points of data, and a single day or a few days can get ahead. So let's add a price requirement. So let's add another study, and we're going to customize this study as well. But in this case, let's delete this. Let's add our own custom condition. This is going to be a price requirement. And let's say we just want the close or the current price to be greater than the simple moving average. And in this case, let's say above all three of our moving averages. So let's go for, we've already required that the 100 be above the 200 and that the 50 be above the 100. So if price is above the 50, we have price above all three. So let's just put in a simple moving average requirement that price is greater than the 50 SMA. Let's put in our 50 length here right now. So let's click save. There you go. Closing price. If the trading's still open, we can replace this mentally with current price is greater than the simple moving average. All right, so let's click OK. And let's see how many stocks. I'm guessing the majority of our 219 have price above that 50. Not all of them, but let's scan. Yep, 174. So we're narrowing the field. Now, as I mentioned earlier, it's entirely possible that we have strong uptrends. We have price above that, but also it could be way up near maybe highs, way up there in the stratosphere. Air might be getting a little bit thin on some of those trades, at least conceptually. So let's look for pullbacks. So what we want now is for price now to be below where price was recently. Here's how that might be defined within a scan on thinkorswim, where it's another study filter. Again, it's going to be a price filter, so we don't need ADX crossover for any of these. Let's just delete that. Let's add our price condition. And let's say that our close or current price today is below, or I should just say is less than a price from a few days ago. Let's go a week ago. So let's say our price low. So we're going below the low of a week ago. Now, we accomplish this by using this offset feature. Have you ever used this offset feature before? It's offsetting from today. So back however many days or however many bars. So if I put a 5 in here, what this is doing is saying the current close or the current price is going to be required to be lower than the lowest price from 5 days ago. So if the lowest price from 5 days ago is here, our current price has to be below that. So within all of this other stuff that we've placed, trend, price position, we're still lower than we have been within the last week. Let's click save. Close is less than the low from 5 bars ago. Perfect. Let's click OK. And let's run a scan for that. Now, I think this is going to really narrow this down. Lots of uptrending stocks right now, lots of prices above trend lines. Not so many that have had a pullback from the low from 5 days ago. So let's click scan. We had 174, now we're down to 36. So trend, price position, pullback. Last thing we're looking for is if that pullback is still going, maybe for the bullish or the would-be bullish trader, the timing isn't right. We might want to see that thing pulling out of its nosedive and starting to rise again. And we can use this technique just in the opposite direction. So let's add one more filter. Let's add a final study filter. And in this case, oops, I didn't want to click edit. Let's click delete. Let's add that price requirement for the close or the current price to be greater than yesterday's high. Matthias says, can you explain the low from 5 bars ago again? Yeah, imagine the candle from 5 days ago. Here it is. Here's its low. That scan that we just put on requires that right now price is below that. How does a price get below a low from 5 days ago? It has to go down. There has to be a pullback to some extent. Now we're going to reverse that logic and require that price is higher than it was yesterday. All right? So we want greater than price high from 1 day ago. All right? So we're looking for our current price to be below the low from 5 days ago, but above the high of yesterday. So it's going to find us somewhere in between. Most commonly, we're going to see a series of red candles taking us down, and then at least one white candle taking us back up. It's not always going to be a white candle because we can be above yesterday's high and still be below today's open. Anyway, let's click Save. Let's click OK. And there is our pullback scan. Is it helpful to you if I share this? Now, I've already previously saved this. Let's go ahead and save it again. I'm going to give it the same name I did the last time. Bullish pullback bounce is, I think, what I called this thing. Let's click Save. There we go. But as I do that, let me share that. There we go. Let me share that, and I will pop that into chat. Go. And just remember that shared links, shared scans are not guaranteed as to timing or accuracy. But I'm going to click Scan, and what are we left with? We have just a handful of stocks. One Morning Rush says above the high of yesterday and not the close price of yesterday. Exactly right. That's the way we structured this. The close, or in other words, the close of today or the current price of today is greater than or higher than the high of yesterday, 1 day ago. All right. David says, do we have any liquidity indicators available in thinkorswim? Well, we've filtered this we're just looking in the S&P 500. Those are among the most liquid stocks in the world. So here are some examples. Let's just test them all. Do we have time? Yeah, let's rattle through these. JPM. Let's see if we've done our job. This is what we're looking for. Let's see if we've found it. Now I'm going to clean up our drawing set here. As I go to JPM, let's maybe remove our current study set. I don't want to delete the study set. Let's just remove all the studies. There we go. And let's add a few things here. Simple moving averages. We have 3 moving averages. We had the 50. Let's make that one red. We had the 100. Let's leave that one green, make it a little bit thicker. And we had the 200. Let's make that one, I don't know, purple? Will purple work for you? Let's make it the thickest. Click Apply and click OK. And let's see. Don't need this drawing right there. Let me just remove that drawing. What do we think, guys? Does this look like we have an upward trend that appears intact? Has it pulled down to support? And boy, look at this. Price in this case is just barely, but still it is, above the 50, above the 100, and actually that 100 looks like it's acting as a pretty decent support in this case, and above the 200. So is this scan apparently doing its job? There's one other thing that I can't ignore here. It's kind of standing out to me. Pretty good ramp apparently here. Coco says, how would using a shorter time frame, shortening up those moving averages change? Well, it changes the emphasis for which trend you're searching for. But experiment with it. See, let's see. Sai says, can we combine this scan with one of my 2 green arrow scans? We could, but you know what? If we start layering on any more requirements, we've already eliminated basically 493 stocks. One more requirement, and we probably have nothing left to look at. All right, so let's have a look at the next one. How about AXP? AXP. Do we have an upward trend? Does it look like we pulled back down to support? Where is price relative to our trend? Is it above all of our moving averages? And is there a bounce? There appears to be. Let's have a look at the next one. How about Citigroup? Upward trend. Price relative to that trend appears to be confirming it's in the same direction. We've recently pulled down to a low. This thing's been kind of rocketing upward. So for some, they might say, well, this has a recent signal. Maybe my reflexes weren't fast enough on this. Somebody says, oh, how do I load the scan? Thank you for asking that, because I don't always remember to demonstrate that when a link is shared. And remember, this only works on your live platform. But the way to load that scan is to pop up here to this little gear icon up in the upper right and open the shared item, the item that I just shared with you. Just pop that in right here, click preview, click import, and then it'll be in your saved scans where I've been loading mine. Or where, anyway, you can find them right here. Save scan. All right, so we look at one or two more before we go place a trade. TJX and COF. Let's see, let's just rattle these off. TJX, COF, USB, and SYF. I don't know if I'm going to remember those. TJX, a little bit shallower pullback here. Maybe support is on sort of a steeper rate of ascent. Looks like it's been moving along about like this and going back even potentially beyond that. Let's extend that to the left. Yeah, you can kind of see that rate of ascent. So pulling back down to support. And was it COF was the next one? Yeah, another example. Pull back down to a support, getting that bounce. There's an earnings announcement around the corner. And we had two more, USB and SYF. USB. Yeah, there's that pullback. It looks like in this case, maybe our support is horizontal, but trend appears intact. None of these are guaranteed to lead to profitable trading, of course. Just because we've made some technical observations doesn't mean the stock is obligated to follow what we think it's likely to do. So the trader might want to have a plan for if the trade works or if the trade struggles. But finally, we had SYF. There's SYF. Yeah, there we go. Pulling back down to a trend line, just popping back up above. In this case, it looks like our support maybe right across these highs as well. Let's play some trades here, or at least one. How about let's make it a contest? How about between Synchro here? What is SYF? Synchron, I can't remember. You can always go to the fundamentals page. You want to look into a company that you've run into for the first time, and you want to learn a little bit more about it. But let's go back here. So it's come down, I'm going to say let's make it a choice between SYF and, how about our first one? What was that? JPM? Yep. Oh, got a vote here for TJX. TJX just dropped off your list for some reason. Could be that it's teasing right at the 50 period moving average. If it slips below that 50, it's going to disappear from the search results. Or, no, it should still be there. I don't see any issues with that. Oh, I know why. It's also just barely, let me zoom in here. There's the low from 5 days ago. It's creeping above the low from 5 days ago. It doesn't qualify anymore. That's why. All right, looks like all the votes are for JPM. Let's do a JPM trade. All right, so how might the trader now take this scan, turn it into a swing trade? Well, typical swing trade will have two elements for planning the exits. Let's just say that we see the entry, upward trending stock, bouncing off support, closing above, or looking like it's going to close above the high of today, of yesterday. We'll see. But an entry or the plans for exit might be using recent highs and recent lows. So how about we say that that our trader here has the objective to get up to potentially this previous high. Looks like that was 337 and a quarter. Let's just call it 337. And a recent low is down at 306. How about we go down at 305 for our stop? So that's going to be our plan for our trade, because it might work or it might struggle. Let's go place that trade. I'm going to go to the trade tab. Let's go to JPM. Don't believe in this portfolio. Let me just check one thing. Let me look in my IRA. No other JPM position in this. That's okay. So let's route this to our advanced charting. Let's go to our trade tab and right click on the ask price. Now, in recent days, we've been spending a pretty fair amount, maybe 30,000 on a trade, maybe 20,000 on a trade. Let's keep it in about that same range. So 100 shares would be 31,000. How about we do like 65 shares? Let's go to the ask price and right click there. We're going to put in a custom buy order with an OCO bracket. And our entry, we're going to put in a market order, try to get a quick fill. Obviously, a market order carries risks with it. We might not be thrilled with the price that we pay. But we had a target up there at 337. That's our limit order. Stop down there at 305 below recent lows. We're going to make those both good till canceled. And there's our trade based on our filter. We're looking for a bullish swing trade setup, pulling down from recent highs in bullish trend conditions. But let's click confirm and send. Oh, need to modify this. 65 shares is what I said. Let's link those together. So it just changes the sell order to match. Let's click confirm and send. Buying 65 shares of JPM at the market price. Going to sell those if we can get to a limit of 337. Take our profits there. Or if we happen to slip down to our stop level, it'll trigger a market order at 305 and we sell. It might be less from that, but 305 is our trigger price. There aren't any commissions on this trade, but there can be on some types of trades. And let's send that off. There we go. So we just bought 65 shares of JPM. We have a plan in place, and on our charts, we can see that plan. So we'll let that work, guys, but I definitely appreciate you giving me your time today. I had kind of a tall task for the trader who's looking for buying at or near short-term lows. How might they find those kinds of stocks? So we've constructed a custom scan. Looks like it's doing its job, but it could still be helpful for the trader to get eyes on the chart first. Guys, go enjoy the rest of our webcast for the rest of the day, and I hope you're having a great weekend. I hope you'll have a great weekend. But before I let you go do that, a couple of reminders of the educational resources that are available to you from Schwab Education. Number one is make sure that you're subscribed to our Trader Talks channel on YouTube. It's called Trader Talks Schwab Coaching Webcasts. And this channel is where you can find our playlists of previous webcasts. You can join the live streams, or you can even do keyword searches as we've done here today. Now, you can subscribe. Just go down below the video stream, click on the subscribe button. That only takes a second. It really doesn't cost anything. So the other thing that Scott and I would suggest you do is to follow us on social media. You can follow Scott on X. He can be found there at Scott Thompson CS. You can find me on X at Cameron May CS is my handle. But you can also follow me now on LinkedIn. Just go to linkedin.com/in and then /Cameron May CS is my handle right there. /Cameron May CS. But if you reply to one of my posts on social media, I try to reply right back to you, and it allows for interaction when the cameras aren't on. That's great. That's the way to contact me. All right. Thanks, guys, for giving me your time and attention today. Go have a great weekend. Thanks, Scott, for helping out in chat. As always, I like to get a quick eye and make sure that we don't have a survey or anything like that hanging out there. But nope, I don't see one. There wasn't one. When you see a survey, if you'd fill that out, that'd be great. But guys, I will look for you in future webcasts. I'll also look for you on social media, on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.